Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update for Monday, July 18th through Friday, July 22nd, 2011 is sponsored by Realtic. All right, guys, let's take a look at last week, and we're going to project into next week. Markets, again, having a volatile trading week last week. I mean, it was unbelievable. Probably I have not seen that options X volatility in months, if not years at this point. Monday, you saw the markets have a big gap down and a drop. Tuesday, we shot up, then collapsed back down. Wednesday, we shot up again, collapsed back down. Thursday, again up, then down. And Friday, we just whipped up and down the whole entire day. Finally, late in the day, we actually, instead of going lower, we shot higher. Net for the week, the market was down, but not that drastically. I mean, you basically went from 134 and change down to 131 and change. I guess that's about a 2%, 2.5% drop in the markets, which is, I guess, considering what we've seen lately, not that dramatic. I mean, we had an up move in the markets over a 2-week span of 6+% on the Dow. The down move prior was pretty substantial as well. Again, there was some good volatility intraday, but it wasn't like we dropped 5% one way or went up the 5% another way. All right, now, the question is, again, what's going on here in the markets? Because if you look closely at this late day push, on Friday, you could think that the markets are setting up for a possible up move next week, and that possibly is what's going to happen. Now, again, is it confirmed? No, you don't have any confirmation of this. We're going to find a lot out on Monday, but basically what you're seeing here is consolidation, choppy consolidation, which could denote a short-term bottom. See how you've been hammering on this low level since Thursday mid-afternoon or so? You hammered on it, bounced, came back down, hammered on it again, bounced, gapped up on Friday, came and hit that, again came back down, kissed it, but made a higher low, and I think that higher low is very significant when you're talking about charts, and then ultimately the markets closed basically at the highs of the day. Now, granted, it is Friday, so you have to discount it based on the Friday effect a little bit, but nonetheless, a higher low here off of this major bottom has to be taken as a little bit of a positive. So that's the first thing I want to bring to you in today's weekend technical analysis video, is the basis of a possible bottom being made in the market short term with a close at the highs and again a higher low put in later in the day here on Friday. Now, having said that, one easy way to tell whether or not the market's going to fall is basically if you take out this area. If you take out this pivot low here at any point next week and confirm it, I mean, if it pierces intraday on a 10-minute candle, which is what you're looking at right now, you're looking at a 10-minute chart on the SPY, which mirrors the S&P 500. If it pierces, that's not a big deal. But if you close below this level, especially if you confirm, which is a key proprietary technique developed here at In the Money Stocks, then for sure you're going to break down. As long as this holds, based on what I'm seeing now, you may actually have continued upside next week. And now, why did we see late day surge on Friday? Well, basically you had Obama coming out midday or so and giving a speech about the debt ceiling being raised. And one thing I thought was very interesting is he said, listen, we want to do a big time deal. That's what we want. But, and this is the key, he says, but if we can't do that, then we'll just raise the debt ceiling and tackle the budget issues and the budget cuts later on. So basically he gave himself an out here. He said, listen, we're not going to let things, default. We're not going to let the U.S. go into a tailspin here. We're going to make sure, at least in the bottom line, we raise that debt ceiling. And that's somewhat of a calming effect to the markets. Now, granted, you're still dealing with Europe. Europe is a mess, although later in the week, you have to say you were very impressed by Italy. Italy getting a budget together with major budget cuts in a matter of 1 week, while, it's taken other countries, even the U.S., months, if not years, to get anything done. Italy, with the back against the wall, if you will, they got something done very, very quickly, so that was good. But really, again, bottom line is the charts are showing me a possible short-term up move in this market. Could be on the horizon. Now, if we go back in the charts, you have to marvel at the levels, guys. The levels on the charts are beautiful. Why? What do we mean by the levels? Well, I think the most impressive level of the week in terms of these master levels on the charts, and by the way, folks, just a side note here, remember, the In the Money Stocks crew here, we, myself, Chief Market Strategist Gareth Soloway, Chief Market Strategist Nick Santiago, we offer you guys a free trial to the Research Center and the chat room. It's a 1-week, 7-day free trial. You can test it out. We're giving out literally trades every single day. Trades, everything. We're talking about swing trades, not day trades. Day trades are in the chat room. Swing trades, more for the research center person that works throughout the day. You want the swing trades at night, setups for the next day. That's what you want to get involved in. In fact, we put out some on Thursday going into Friday. They got triggered. And again, I'm not going to tell you what they are because that's not fair to current members. But if you want, take the free trial, test this out. There's no obligation. You basically give it a shot. And if you don't like it, you cancel it and you're not charged by the end. And again, after 7 days, it doesn't renew. So again, bottom line is you like it, you stay. we are pretty firm with the fact that everyone that comes to us for a free trial makes money, so therefore they're going to stay. But, if someone doesn't like it, it's good out. You just move on. In any case, going back to these levels, folks, this level down here, very impressive. Now, why did I have this line in the charts? Where did this come from? Because, did it just come from this day right here? No, absolutely not. When we put together our master levels on the charts, they come from past history. And that's how you know something in the past that was a major level, chances are in the future will become a major level again. And what I want to do right here is zoom out on the charts. And what you can see back here is there's a gap going back to the 29th into the 30th of June. And you can see the gap fill right here in the pivot high. That's where you get that line. And isn't it amazing how you gapped up and went all the way up, but then since then you've come all the way back down, and look at how that level has held up. And again, I gave this to our members in the chat room. We talked about it in the research center, and it was a beautiful level. This is one of the best, calls of the week in terms of levels on the charts. We had some great trades as well, making profits on Google, making profits on 3M, and a couple other plays as well. But bottom line is, level-wise on the spiders, on the S&P 500, this was the level to watch. Came down, kissed it, and if you bought on that at any point throughout the week, you made money. Now, the other level I think that's important to recognize is the red line. Red line, you can see, you basically made a pivot bottom right here. If we zoom out, it actually comes into play again with a gap fill back here. Look at this. Going back to basically the beginning of June, even late May here, the level is perfect. It works. Support, 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 bounce. You came back down, pierced it, got above, support, gap down, go down, go down, go down, got back above it, consolidated, finding that same red level again, and then ultimately you raced higher, and then this time you came back into it, bounced, you gapped below or pushed below but never confirmed, got back above, bounced, bounced, and then finally you did get below and confirmed, which means the red line now becomes resistance. And there it is, resistance, pullback, resistance, pullback, resistance, pullback, resistance, pause, and close on Friday. So again, my guess is we probably go up a little bit from this area as, again, the bottom here is more powerful than this level, which has been chopped through a few times. But I guess I point these levels out to show you the amazing nature of trendline analysis. Trendline analysis will literally give you the pivot highs, pivot lows of any move in the market, whether you're looking at the daily chart, weekly chart, monthly chart, or intraday charts. Anyone who tries to invest or swing trade or day trade without levels on charts is insane, because essentially what you're doing is you're flying blind. When you know this is going to be a buy level down here, why wouldn't you wait for that? Some people that don't use trendline analysis, they're buying here, they're buying here, they're buying here, they're buying here, they're buying here. Who knows where they're buying? They could be buying all the way up here for all we know. Ultimately, you need to know your levels. You fine-tune your entry, and as many traders that are professionals like ourselves will tell you, entry price is everything. You could have 10 people entering a stock the same day, and only 2 of them or 1 of them will make money because their entry price was at the right level. Everyone else could be out of the money. Maybe they entered it too high. So entry price is everything. You need to fine-tune your entry prices on investments, on swing trades, and day trades. In any case, market again, very nice consolidation here. Again, watch to see if it takes out this red line. If it does, then you have to take out the 200. If you take out the 200, my guess is next week you go to this level right here as a first stop, which will be 132.75-ish, and then ultimately this level up here, which will be 133.20 to 25. All right, and then after that, we have to see if we're going to fill the gap all the way up to the 134. I don't think necessarily we get there that far that next week. The only way we get there next week is if there's an actual debt agreement done for the government here in the U.S. If that happens, then you could have a major rally in the markets, a day up where you're up 2.5 or 2 points on the SPY, which again would equate to about 20 points or so on the S&P 500. And that would be just a reactionary thing as people realize one less issue is in the way of the market right now. It doesn't have to worry about that. Eventually, we'll have to turn back to Europe. But again, keep an eye on the levels here. Let's go to the daily chart quickly, guys. This is a beautiful daily chart. Again, as I have said to many of our people that have come to us and asked us, I've been interviewed by radio stations and TV and so forth, and done some other analysis for hedge funds and such. And what I say about us here at In the Money Stocks is we're neither bullish nor bearish. Now, short term, yeah, we are, but we're never long-term bulls, long-term bears. What you want to do is be a shorter-term bull or bear in terms of going long or short the markets. And essentially, basically, this was our exact high pivot back here where we came out and I said, guys, this market, and I said this as much as a month before. When we were over here, I said, eventually the market's going to go to 137.10. And I gave 137.10 as an exact level, and I said that will be the top of this market. And I said this 3 to 4 weeks before we even got there. And ultimately, we ran up. We went to 137.18 with an 8 cents on the SPY of the exact pivot high. Nick, my partner, he had a cycle date literally right for then as well. They coincided together, which is always a great call. And then that point the market turns down. So basically what we were doing here is shorting the market. As the market came down, I gave everyone, and I even said on these in the weekend technical analysis video, if you go back to this time frame, I said this low pivot down here is the best level of support this market has seen in years. Those exact words were used. Best level in years. Basically since March 2009, I said. And 2010 pivot low. But again, essentially major level there. Markets at that point, we started to go long. So here we rode shorts. Now we start to look for longs down in this area. Longs come in, pops. As we get up in this area and we pop through, we come into another pullback time frame. We go short, and we made some money. As I mentioned, we have some SDS, we had some Google. We've gotten rid of it since then on the short side, which was a great trade before the pop on Thursday earnings. And then we also had 3M, made some good money there, and some other stuff. And then ultimately, since we came back to this 20, this was my first target was 50, second target 20. Now we've hit both targets. Now we look for a bounce. And on Friday, we actually initiated a couple long positions, which again, as I said earlier in the video, I can't really reveal. But bottom line is, notice how you're shorting, going long, shorting, and then going long. And by doing that, you actually make massive amounts of money in comparison. Someone who went long way back here, let's say they went long or short right here. They're basically flat on the markets because the markets from that point on right here is trading in the same area. However, by going up and down and long and short, this market, you could literally be up, and you should be up by now, probably 10 to 15% easy in your portfolio, while everyone else who's just investing at that level is flat. And by doing that month after month, year after year, you literally should bank 100% a year. A good swing trader will do over 100% a year. While the average trader, investor may only be making negative returns or flat, or who knows what they're making, maybe 5-10%, not that much. So again, it's learning, and believe it or not, swing traders is the fastest growing group of investor out there. And if you're not involved, you want to make sure you're taking the swing trade alerts inside of the Research Center. Which, remember, the Research Center, free trial, go take it. It includes everything underneath that Research Center. It's a fantastic product. All right, in any case, let's go on to some other charts. Let's take a look at the dollar. The dollar has been very, very choppy of late as well. The dollar's been stuck between this area down here and this area up here, especially lately with you just been going up and down and up and down. And remember, the markets go inverse to the dollar. So essentially what you've been doing is just chopping around, which makes sense because if we go back to the spiders, you can clearly see this market's chopped down, now it's chopped up, now it's chopped down. So it is kind of following that same general trend in the opposite direction of the dollar. All right, so again, if we go back to the dollar chart here, the UUP, you can see that choppiness right there. Ultimately, what you're trying to figure out on the dollar right now is, are you going to break down to this pivot low here and possibly down to this pivot low, or are you going to come up to this pivot high? If you come up here, you have a good chance of hitting the 200, and that actually should push the markets down if that happens. I'm not a believer that that's going to happen. I'm more likely on the camp that if the debt ceiling gets resolved, the dollar falls a little bit more, and if that happens, then we actually may have a little bit of upside short term in the markets right around here until we get into this support level. All right, let's take a look at gold. Gold had an epic run last week. Double top got taken out. Look at this double top right here. You got taken out right here. You kind of continued up. I do think gold is getting near a pullback, and I think a lot of the drive in gold obviously hasn't been the dollar. Most people would say, well, gold goes up when the dollar goes down, but that's obviously not the case because the dollar's been going sideways here, right? So it can't be that that's the reason behind gold's massive move up here. The actual answer is the fact that people think they're so pessimistic about what's going on with the debt ceiling and with Europe that they've just been buying gold and dumping currencies altogether, especially the euro. All right, and gold going up like this, that means that if any sort of optimism comes out in the next week or two, whether it's debt ceiling or not, you should actually have a pretty nice drop in gold. Now, am I short gold? No, I'm not. I'm not short the GLD. I'm not short gold itself. But am I looking for a possible entry maybe next week? Yes. Yes, if we hit a key level, folks, I'll take a stab at a short on the GLD here. And again, I'll give it out in the hot charts and alerts, which is part of the Research Center. So you want to get involved, obviously, and take that free trial so you get that call just as one of many. And again, I'll be putting out new trades on Sunday night. We have a No Hype Live for next week, probably Wednesday night. I have to schedule that in, which is a live forum, kind of a live webinar where you learn and we discuss the markets, you ask questions, all that fun stuff. And again, that's all for you guys out there to maneuver through. In any case, there's lots coming up next week. We're obviously initiating positions. Small caps have been unbelievably hot lately. We're making money left and right. One of the greatest things last week was this trade right here, folks. I'd given this in the nightly video a couple times, talked about CEU, which is China Education Alliance, which is a crappy Chinese stock with a lot of, question marks around it. But bottom line is, all things bounce. Doesn't matter what it is. It depends on the level. Remember, price and entry is everything. And I was talking about this around 90 to 95 cents over all of last week. And Friday at 3:30, we started to see. I was watching the level 2, and all of a sudden, the stock had traded trades about 50 to 100,000 a day. And I think on Friday it was at about 88,000 shares. And all of a sudden, a block of 100,000 went off on level 2. Price did not budge. It meant it was going outside of the market, which is something I'll explain in probably the No Hype Live this week or in the nightly video. But then all of a sudden, 250,000 hit, and the price didn't move. Then another 100, another 250 hit, and ultimately it was almost at 1,000,000 shares. And I on Twitter, if you're following me on Twitter, Gareth Soloway on Twitter, all of a sudden, I was typing on Twitter, blah, 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 this stock is going to go, guys. There's someone loading, a hedge fund's loading outside the market. This is going to run. All of a sudden, it was trading at 93 cents through all these large prints. You could have bought as much as you wanted at 93 cents. The stock, within minutes, in the last 15 minutes of the day, pops up to $1.08 as a high. From 93 cents to $1.08. Look at this thing take off on the 10-minute. It was ridiculous. And look at the volume buyers here. These are the blocks going off, 100,000, 200,000, and then all of a sudden we had a block where 400,000 in total went off. And notice how price wasn't changing the whole time. And then again, as I recognize this buying and enjoying, and again, I'd given this trade out earlier in the week, so a lot of people in the research center and chat room had it. Then it takes off towards the end of the day, and look at that go. So again, that's a great one. I'll tell you the one to run that's going to run next week. It's going to be this one right here. It's already inching up. Low end of the chart was $7 back in really March. This is trading at a 1 PE, trading under cash. It's a Chinese technology company. Now, again, it's not a matter of whether it's a good company or bad. Ultimately, it's a valuation issue here. And ultimately, if it gets through, it should pop and touch this high. My guess is Monday or Tuesday, 285. If it gets through 285 in the 50-moving average, then it's going all the way to about 320. And I would not be surprised to see this thing well over $3 next week. So watch ZSTN. ZSTN is the symbol. That's my one tip for all of you guys on small cap land coming into this week. All right, guys, I think I've given you out enough for this weekend technical analysis video. Remember, the easy answer is you want all these trades. You want the small caps. You want the large caps. You want anything out there. You want the videos. You want the No Hype Live broadcast where you ask questions of us as chief market strategists. If you want the daily market reports and everything else, just take the 7-day free trial of the Research Center. If you're more into swing trades live and day trading live, then take the chat room. Do them both. You can take both of them. Bottom line is, we're going to be making more money last week. Again, we've been making money every single week. Every single week there's money to be made, and we're doing it. No one else is doing this out there. 90% success rate on trades. Come join us at inthemoneystocks.com. Take care, folks.